Alright, lesson 10, episode 10, I think lesson 10. Probably the last lesson for the complete beginner's guide, the complete beginner's methods to trade and how to start learning trading, how to start your journey as a trader. And remember, this is why I made this course, for people who need a guide to actually, a step-by-step guide to actually getting into the market and starting to play the markets and fucking start to learn to trade, start to learn to handle your emotions, your patience, discipline, how to manage your risk, which is about what I'm going to go over, how to actually get introduced to trading. And remember, if you ever have any questions, you're struggling with anything, you can always message me on Discord Discord. So risk management. What is risk management? So I'll just go straight into an example here. All right, it's the example I used last lesson, but it's a decent example. So say you are a break and retest trader, right? You identify a position of interest, or point of interest, sorry. Resistance turned into support. So what you're waiting for, as I went over in the last lesson, you want to wait for price to come down here before you buy, of course. So you have to watch it and wait for the candles to come down here, to land here, and then go up, right? So you get your tool, your buying tool, place it at like the line, a bit above the line, put your stop loss. You can put it below these candles, you can put it below here, even if you want. You can put it wherever you want. It doesn't really matter. Well, it does matter, your stop loss doesn't matter, but you have to decipher where you want to put it yourself. Whether you want to put it below the lows, you want to put it at a fixed amount of pips, a fixed 20 pips, 10 pips, 30 pips, 50 pips. You have to work it out yourself. You have to, if you're trading on the 1 hour or the 4 hour, you want to make it a sizable trade, or a sizable stop loss. You want to probably aim for a 2-to-1, maybe a 1-to-1, just to get used to the market. So risk management. So there's a couple of things to this. What is your risk management? Well, one of the main things in risk management is your stop loss. So say you have your stop loss down here, right? So if price you're in the trade and it comes down to here and you get taken out of the trade for a loss, again, that's the importance of the stop loss. Is a part of risk management, is you have to have your stop loss at a good, reasonable place, so that if price goes down there, it'll prevent you from losing more money. So you don't want to have a stop loss all the way down here, because you're going to lose lots of money, all right? And you don't want to have it really tight either, like here, because it can just take you out of the trade instantly and you'll just keep losing over and over and over again. So you want to have a decent sized stop loss, right? And your take profit can be up at the highs, or you can have it wherever you think is good, right? You can go for a 2-to-1, for example. Actually, yeah, a 2-to-1, right? I'll use a 2-to-1 as an example for a beginner. So you have a 2-to-1 trade. I'll make this an easier color to see, actually. So you have a 2-to-1 trade, right? So 2-to-1, what 2-to-1 means is your take profit. So if price comes down and goes up here, your take profit means, like I explained in the last video, price comes up there, you'll be taken out of the trade in a profit and you'll just take your money automatically. So what a 2-to-1 is, if you click your position tool, you can see risk to reward ratio is 2. So what this means is the take profit zone is 2 times as big as your stop loss. So that means you can, if you lose this trade and it comes down and it hits your stop loss, right, unfortunately, then in the future you can take another trade, say here, right, wherever you want, right, put this here or something, right, you put it here and bring it up to a 2-to-1. If price somehow did come down and it came down here and you got in here, right, and then it hits your take profit, that means over these 2 trades you made a profit of 1 RR, because you lost 1 RR, so you took 1 loss and then you basically won 2. So you want to view your trading in terms of RR, which is risk to reward. So you lost 1 RR on this trade, but you gained 2 RR on this trade if it hits here. So that means that you're actually up 1 RR. And what an RR means, and now remember, you want to have your risk to reward always bigger, right? You want to have this zone always probably at least a 1 to 5 to 1 or 2 to 1. You want to have this twice as big or 1.5 times as big as this, right? You don't want to have it. You don't want to have a number like this, right, where your take profit is a lower number than your stop loss, because that means if you lose a trade, you'll have to win more than one trade to gain that loss back. So, what is your risk, right? What actually does your RR mean? So if you were to lose this trade, your risk, the amount that you're risking of your account, is how much you would lose. So how to calculate your risk, right? So for example, I have a demo account here that you want to open position, or you want to open MetaTrader, right? And you want to have your position size calculator open. So if I were to buy here, right? Again, I'll do this entry here, right? Profit level here, stop level here. So you've got a pending order here. When it comes down here, you'll be in the trade. You want it to come up here for a 2 to 1, or you lose for a -1. So how to do your risk in position size calculator. So what your risk is here. So what a 1.00 means is you're risking 1% of your capital. So for example, if I have a 1% risk, I'm risking out of this 10,000 USD account thereabouts. 1% risk means if price were to come down and hit my stop loss, I will lose €100, right? Of the account. I will lose 1% of the account. So I'll get on to how you want to divide this, but you never want to have a risk, say, of 2% as a beginner. You probably, as a beginner, I would say around 0.3 to 0.5 risk is good for a beginner. So 0.5 risk means you're risking 0.5% of your account. So 0.5% of 10,000 is 49 or 50. So you'll be risking 0.5% of your account. You can do it out in calculator. If you've got a $5,000 or $5,000 or euro account, 0.5% of it would be what, like, I don't even know, but I'll do it out here. So say you've got 5,000 divided by 0.5. Never mind, that's the wrong maths. I'm a retard. Fucking 0.5% of 5,000. Oops. So you're risking 25 euro, right? Oh shit, bro. So you're risking 25 euro if you have a 0.5% risk on a 5,000 account, just for an example. Right, so how would you calculate your risk? And this comes on to my next point for your trades, is something called prop firms. So you've probably heard of the word or the term prop firms, because it's an actual term in the real world, a prop firm. So what a prop firm does is, if you go to a prop firm online and you purchase something, usually what prop firms will give you, like such as FTMO or MFF, what a prop firm will give you is, if you purchase one of the challenges, what a challenge is in a prop firm is you have to make a certain amount of the account, say 10%, you have to gain 10% of the original account, and they will give you a funded account, say of 10,000 euro or 50,000 euro or 100,000 euro to trade with, that is yours. And on these accounts, you will have a max drawdown. You will have a max loss amount. So if your max loss is 5% and you risk 0.5, you can lose. If you lose 10 trades in a row, your account is gone. Or if you have 1% risk, if you lose 5 trades in a row, your account is gone. So if your max drawdown is 0.5, you want to maybe have your risk at 0.3 or something, if your max drawdown is 5% of the account, or you want to have it at 0.25. That way, if you lose, 20, 30 trades in a row, that means you lose your account, and that's almost impossible, right? But if your max drawdown is quite big, say 10%, you can probably risk 0.5, 0.75, even 1% of the account if you're a decent trader. So something really cool about FTMO is, if you go onto the FTMO website, ftmo.com, and you sign up, you make an account, and then you go to the client area. It'll have a little client area thing in the top right, and you go down to free trial. What you can do is you can get a free trial account, which means that if you get a free trial account, you will have basically a simulation of having a 10,000 euro account, or 100,000 or 50,000 euro account on your MetaTrader. So you can practice trading as if you had a big capital and see how well you can do with that, right? That's a very good tip. You as a beginner, you need to demo trade before you buy an account, right? And you need to do lots and lots and lots of demo trading to make sure that you're profitable and to get used to the market. So on FTMO, if you have I think it's a 10% max drawdown, you want to risk about 0.5, so you can lose 20 trades, and that will basically terminate your account if you lose 20 trades in a row from the start, which is pretty much impossible if you know anything what you're doing. So takeaways of this video: you always want your risk to be bigger, you always want your risk to reward to be more than 1, and you want to risk a reasonable amount, so a small amount, maybe 0.5 of your account, 1% of your account, 0.25% of your account, depending on what you have. Prop firms. I'll go over this once more. A few of the good prop firms you can look up are the Fivers, right? A good prop firm is the Fivers. Another one is FTMO, another one is MFF. You can look up the best prop firms for trading, and you can either buy an account, but do not buy an account if you're a beginner. If this is your first time looking at how to trade, don't buy an account until you demo trade on ftmo.com for a bit. Alright, so that's risk management. You want to always not risk loads. You don't want to risk more than 1% as a beginner. Risk 1% or less every trade. That's how to use position size calculator to calculate your risk. So that's pretty much it. Now you know the basics of the market. You know how to set up a trading account, how to calculate your risk, how to look at the charts, what all the candlesticks mean, some basic chart patterns, basic technical analysis, support resistance, trend lines, Fibonacci, market direction. You know pretty much all the basic things you need to know to start trading. So remember, trading is a long game. That's why I've made this course. Remember, I've made this course for the beginners who want to first get into trading. They want to first start learning the market. And, you know, trading is a long game. At the end of the day, trading is a thing that you want to see yourself doing for 5+ years. Of course, you can make money and be profitable from, you know, a very short amount of time. But trust me, you're not going to be profitable as soon as you start. But if you just stick to a simple strategy such as break and retest on a high time frame as a beginner and demo trade to start off to practice, then you will be profitable if you purchase a real account from a prop firm. Or of course you can use your own money to start. You can start an account with like 50 euro or something, or you know, whatever is a small amount of money to you, and trade with that if you want to just try it out. And you can try risk only 1%, or you can risk more if it's your own account. If you've got a 50 euro account, you could risk 5%, because then still you need to lose 20 trades. So you know, that's it. That's all the basics. You know, that's what you would have spent months searching for a simple course, a simple person to tell you step by step the basics of the market, how to start trading, how to set up an account, how to manage your risk properly, the best prop firms to get, basic, you know, market direction, all this. There you go, you have it now. And if you ever need help, message me in Discord. I'll always be in Discord. So yeah, thank you for watching. Thank you for watching the beginner's course, IDG full beginner guide to trading.